Welcome to Markets Now. I'm Michelle Rook with Dave Chatterton with Strategic Farm Marketing. Some mixed closes in both corn and livestock futures trade here today. And Dave, let's pick off soybeans first. A pretty nice rally. Products helped push it along, but how much of it was just putting weather premium back in with the Brazil rains that we saw over the weekend being a little disappointing maybe?
Yeah, Michelle, I think you nailed it there. It really has to do, almost holistically with that. When you look at what happened last week, or I should say over the weekend in those central and northern parts of Brazil, the dry areas that we've been highlighting, rains there are a little bit disappointing. There was some rainfall. A few areas did catch some good rainfall, but it's mostly to the southern fringes of that area. And when you look at the area as a whole, coverage of over, let's say, a half inch, only about 15 to 20% of the region got that. In addition, we're looking at a forecast now this week that doesn't look as wet as it did when we went home on Friday. Those rains are getting pushed forward into next week. And, if you look at the 6 to 10 day or the 11 to 14 day portion of the outlook, it does show some rain, but I think confidence in that is fairly low at this particular point. So, tough to nail down the exact size of what that Brazilian bean crop is going to be at this point. Certainly the private estimates are starting to come down. We're starting to see numbers leak below that 160 level, but maybe the way to frame that up in whole is to say, I don't think the crop is getting any bigger right now, especially with the forecast that we're staring at here today.
So since the market is still trying to figure out how big that crop is, will we just kind of maybe trade in a range here for a little while, you think?
Yeah, I mean, I think there's certainly some upside here depending on where we go. Our number on Brazil right now, Michelle, is probably closer to 150 million metric tons. And that's, very different from where the USDA started the year and probably above most of the private analysts on the street. But that's only one part of the equation. The other part is Argentina, where you're going to almost double your production from last year. Weather has been very favorable. We're talking about, a near record crop there. And so when you, in rough math, if we add 20 or 22 or 23 million metric tons to that Argentine side, take a little bit, 10 or 15 off the Brazilian side, we're still going to end up with what looks like record soybean production overall. So I think the trade anxiety here may be more about timing than the actual size of the crop. And the timing issue has to do with China, counting on those early beans to come off, in northern Brazil, where it's been dry, where they're behind on planting, where they have some replanting to do. And certainly that flow of those first beans coming in at their harvest is not going to be up to the either the quality or the quantity levels that I think China would like to see. And that may push them back here towards the U.S., where our balance sheet remains very tight.
Yeah, we could use a little more business, though, to get caught up on our weekly exports for sure. So what about the corn market, though? Corn market today got pulled down a little bit by wheat, but you mentioned Brazil, and obviously there's some concerns starting on the second crop safrinha corn. And when will that start to be a market factor, do you think?
Yeah, it's definitely something that folks are talking about right now. I don't know that there are a lot of people trading it right now. We're not, if you go back and take a step back and look at that Brazilian corn production, 75 to 80% of their overall production is a safrinha or a second corn crop, grown behind a full season bean. So in this case, the majority of that crop, and the part that gets exported will not even be planted until February and March. So we've got a ways to go on that. I think at this point, we can assume that acreage will be down because profitability is low. We're seeing farmers reporting that they're, buying less seed technology, going to use less inputs. That has an impact on yield. And I think the beans, stretching out to a late harvest, again, when you account for that in the terms of, Brazil being lower, Argentina probably being higher, again, don't see a problem with overall supply, but there are definitely going to be some hiccups along the road here. But haven't seen the corn react in a way where we've got plenty of corn on our balance sheet here that if we do get a few more exports, which the USDA did, we added 25 million last week. If we get a few more, not going to really push us into a bullish territory in terms of our stocks to use our ending stocks measures here.
Rumors last week that China might have switched some South American corn over to the U.S. and maybe we could get some business out of the PNW. Do you see that likely?
Yeah, I mean, I think our expectation right now is that there's going to be some of that. There is some of that just about every year. I think in this case, looking at where the bean crop is going to land, there's some safety there that, hey, we're going to secure a few more cargoes here for Jan and Feb. Having said that, I think, looking at the amount of corn that China has taken this year from Brazil, a record amount, still some on the water, and with their margins not being necessarily great, China will take some corn from the U.S., but I don't think it will be material enough to affect the balance sheet or, said differently, to sustain really much of a rally in CBT prices here.
Well, and it's going to have to go out PNW because Panama Canal is going to be pretty difficult to get through that area, isn't it, Dave?
Yeah, it's a tough deal right now, and they're experiencing the same, low water, dry conditions that we did on the lower Mississippi here this year. And it's a situation where normally, there was a report out from the Port Authority today talking about normally they would be locking through around 33 to 35 vessels on any given day. We're currently at around 22 vessels, but they expect that to drop down to around 18 by the start of January. So you're talking about almost, cutting that in half here of what would be the normal capacity. And so certainly that means that U.S. exporters of grain are going to have to reroute some cargoes. That's going to cause additional costs. It's going to make us less competitive, if you will. And it's just another headwind that we're going to face in terms of competing for exports here going forward.
Yeah. Dave, we also saw the new president in Argentina, the inauguration last night. What do you expect in terms of his policies? It sounds like he's going to announce some of those this week. What impact could it have on our markets?
Yeah, I mean, certainly everybody kind of waiting to see what happens here. This is the effectiveness of, or effectively a 180 for the Argentine economy if he's able to get done some of the things that he's talking about. I think anything and everything seems to be on the table at this point. It looks like, he made the announcement overnight, or in his acceptance speech yesterday, I should say, that there's no way to affect these changes without a harsh impact on the Argentine economy, but it has to be done in order to tame their hyperinflation. So, what that means in terms of what it means for farmers. And I think they're going to be very tight holders of grain here in the near term until they figure out what these policies are going to be. They're waiting to see if taxes may be reduced. So it kind of puts everybody on the sidelines here as we wait for the ag policy to kind of get framed up. And I suspect that's going to take more than just a couple of days here, Michelle. I think it's going to be a couple of weeks, a couple of months at least here.
Okay. Wheat market, what did we just run up into some chart resistance and see some profit taking? Is that why we were down today, or is there more to it?
Well, I think it's profit taking. I think it has to do with, it all goes back to, China and the amount of soft red wheat they've taken here, kind of catching the market by surprise here over the last 3 to 4 weeks. And I think the trade is now assuming that buying program, for now anyway, is over. And while it certainly has affected the soft red wheat, component of the balance sheet, the overall wheat balance sheet remains, I guess, less than enthusiastic in terms of its bullishness. By having the rally that we have in futures here of late in our markets, we've now priced our exports above those of, let's say, France or Australia or some of the folks that we're competing with. And it just doesn't look like we're in a good position to compete for traditional business. China may or may not step back in, but I think it's probably, the market assumption here is that they're going to at least take a little bit of a breather and kind of wait to see what happens. So wheat, the old saying, Michelle, you need to feed the bull every day. We certainly didn't feed it today. And I'm not sure how much fodder it's going to find here in the coming weeks.
Okay. So funds did cover some of their short position in wheat, but maybe aren't going to do much more then, huh?
Yeah, and I think that's a good point, maybe, Michelle, is that when we saw that fund short covering come into the wheat based on China, buying and kind of igniting that, we got a very good price reaction, almost $1 rally in the wheat in the soft red winter, because of that. And I think the cause and effect of that is that there's no natural seller on the other side. When the funds want to buy that short back and look for a seller, there really wasn't anyone there, and we got that. We saw a little bit of that similar action in corn, but we saw a much more orderly transfer. And I think that's an indication of, what we are all already know. And that is that the farmer is holding probably more length than he's comfortable with here right now and is anxious to sell corn on rallies. So when you frame that up of how that might work in the future for corn, I think it's an important point to realize that there's a natural farmer's, selling element on the other side of those funds if they decide to cover those shorts.
Yeah, that setup is very similar for wheat and corn right now. Cattle market, second up day. And do you think that, is the market trying to put a low in? I mean, we're not very far from these contract lows we put in last week.
Yeah, I mean, it's good news to see. We tried the downside today. It's really, I guess it made me feel better that we were able to hold that and rally just a little bit. We got a long way to go to kind of correct these charts. The old saying is, it takes a while to build a little bit of a base here, but when we talk about, kind of where we're at going forward, you've got, you've had declining beef prices, you've had, these wholesale values, these cutouts, all under pressure here a little bit. Packer margins are negative. That's putting some pressure on the live values. The offers, at least starting this week, they may be a couple of bucks above where we traded last week, but in light of last week being 3 to 4 lower, we still have some wounds to heal here in terms of the cattle complex and where things go. So it feels better today, but I think the jury's still out in terms of how we kind of trade into the middle of the week and maybe finish out the week on the weekly bar.
Yeah, and speaking of that, that cattle market has a lot of economic news it's going to be watching this week with the Fed decision and CPI, PPI. And so talk about what you're expecting out of some of that news.
Yeah, so all that's packed into the middle of the week here, Tuesday and Wednesday. We've got the Fed meeting, and an announcement, on Wednesday afternoon. Virtually no one is expecting the Fed to raise interest rates at this particular point. I think that's the correct call. The guidance will be the key. And, is it still higher for longer, or is there some, crack in their armor of terms of when they will maybe start to cut rates just a little bit? The CPI and PPI data also coming out Tuesday and Wednesday, respectively, going to give us a read on inflation. That's going to be very key in terms of what it means for those rates going forward. And we look at, kind of where we're at in the retail demand or the overall demand element for beef. We need some of that demand to start showing up here. We're definitely going to look at lower cattle numbers and lower production going into the first and second quarters, but we need the offtake on the other side of that, particularly for these muscle and middle meats.
Yeah, we'll be watching those numbers very closely. Thanks so much, Dave Chatterton with Strategic Farm Marketing. That is Markets Now.